Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So today we have prepared the weekly report as usual with the fundamental update. So, in two words speaking, our long-term view currently is a bit tricky because a lot of scenarios exist of the possible progress and driving factors that we have in the fundamental part. In the long-term view, we're trying to combine them all, being the more or less structured picture for price action in the euro currency. In the shorter term, still everything stands relatively simple. Still, we suggest that you will read the fundamental background because you will better understand what to expect in the technical part as well. Just a few examples. So if you remember a couple of weeks ago when we talked about long-term perspective, we said that one of the possible scenarios has relation to so-called the dollar smile fundamental strategy. It is based on the fundamental factors and mostly just reflects the economy cycles in the United States economy. So starting from the non-inflationary growth and it turns to inflationary growth and so on. And when the dollar starts to rise, we have some concern that actually we have the 87.4 long-term target on the market that should be hit before a major reversal will start. And currently in the fundamental environment, we have a new vector, new direction when investors start to talk and the sentiment is changing. So they start to talk that the first euphoria of the rising of the interest rates on the recovery or so-called reflation starts to fade. And dollar currently, this power is exhausting and dollar could turn to the previous way of the downside action. That actually totally corresponds to our view. But in this case, from the technical point of view, how we could combine the hand and shoulders pattern that we have on the weekly chart that we discussed and actually 116 target that you could see here and a potential reversal on the dollar index. So here we have to find some way how to combine these different targets, what to keep an eye on, find scenarios how both of them could be completed. So that is not really a simple task, and that we have tried to do in today's technical update. In the fundamental background, you could see our view on perspective from the short-term perspective and the long-term perspective. In general, the basic scenario, the major scenario that we are following currently hasn't changed. So we see that right now, rising both of the interest rates and stock market definitely point on non-inflationary cycle stage. So this happens very often because in this case, in the first stage, markets reacts on the improving of the economy environment, of the growth. So demand is growing as for the money, as for goods and services. That led to grow both markets as the liquidity market, bond market, cash market, as to stock market. But at some point, when inflation starts to rise too much, it starts pressing on interest on stock market, and stock market starts to fall. So we suggest that this should happen a few months later, somewhere in the summer, maybe closer to the autumn. But all this scenario perfectly fits to our technical background that we see, especially with the long-term dollar target, and, well, perfectly fits to technical picture on the euro currency as well. So you could read it. It's not really a very big report this week, but it's very interesting. So let's return back to the short-term situation. On Friday, we discussed the potential pattern that might be formed here as the hand and shoulders, because overall recent performance stands not bad On the weekly chart, actually, you could see that market has formed some kind of morning star pattern here with this upward action. Friday was inside session, so it brings nothing new actually. And on Friday we said that we could get the sloped neckline just because of the existing strong resistance around 90.50, 90.56. It means that market probably at the first hit of this area should start to form right arm. And on the euro currency, the appearing of the skewed hand and shoulders is very often the stuff. So you can see here what has happened in this month. Also, as you can see, neckline has the slope. So ABCD has been completed and market collapsed. Something of that sort could happen here. So first we're watching for reaching 1950 area. Should be completed. Then, as usual, we're watching for a right arm. And potentially major focus will be on the 1830, 1850 area. Why? Because for us, on the daily and weekly chart, the major target still is XOP is 116. And it could be reached in twofold. First, it could be reached after the hand shorts will be completed and then downside action could follow. Or, in a more simplest way, this could be just failure here and downside continuation. That's also possible, why not? Well, that's why this point will become very important, and especially for those who plan to buy EUR on the daily chart, who train or intraday charts, and who would like to trade this possible hand and shorts. So that will be the very important point in our technical view. Then, if hand shorts will work, then we should get some kind of ABC pattern with a breakout of this confidence resistance. That's relatively clear strategy, nothing sophisticated. As I said, in the short-term analysis, everything stands relatively clear. On the hourly chart, we talked about the possible free drive pattern that might be formed. Of course, we could calculate some fib levels here, but somehow something tells me that the chance on the upward direct continuation right to the resistance looks more probable. It's just because of the recent type of the action that we see. It's very gradual and slow. Also take a look at the ratios. The potential head and shoulders will not be formed because take a look, that's not the type of the right arm. This is absolutely different type of action compared to head and shoulders. It's more tending to the upward direction. And well, the drives, the extensions of the drive stands very close to each other, completing the nice shape, the free drive pattern. Finally, on Friday we've got also bullish hidden divergence with the MACD. That suggests the taking out of this stop. If this will happen, so this point should be reached. For scalp traders, using the free drive and a strong confidence on the daily could be nice background for taking the short position. With a very tight stop, so it could be a great risk-reward ratio. With the nearest target somewhere at 1850, 100 pips potential, this trade will be also not bad. So you can see we have few options for trading, few different scenarios, multiple scenarios on the different time frames. That's approximately things that we intend to keep an eye on in the coming week. And once the hand shoulder shape will be here, that starts the major part of our analysis, depending on what will happen right at this point. This will be a very important, vital point for a daily trading setup.